Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson with a look at the action in today's session. It is Tuesday, August 27th, and we saw a little bit of upside reversal action in the indexes. We're going to take a look at Nvidia, GE, Vernova, and Ardent Health, Ed. So good to have you. Let's take a look at the major indexes. What do you make of the action today?
Yeah, I mean, it was nice that we held support. This is really pretty nice action because if it had gone really strong, that would have made investors, things would have started breaking out of little handles like the Nasdaq or the S&P. If we'd sold off, so either way, investors would have had to make maybe difficult decisions that they wouldn't have known, given Nvidia earnings, how that could turn around. So better just to have it wait, pause here, let some more handles develop. So generally, I think this is all very positive. It really all comes down to Nvidia tomorrow, especially for the Nasdaq. But get that above 18,000 on Nvidia. You can imagine a lot of things looking pretty interesting because at the end of tomorrow, this would sort of be a handle, and you can imagine a lot of things would have handles. Yeah, pretty constructive action so far.
Yeah, so in terms of the performance today, both the Nasdaq and the S&P 500 up almost 0.2% apiece. The Dow just edging slightly higher in the stock market today. The Russell 2000 down 0.6%. So small caps, we can check that out. A big move a couple of days ago. So we're right around that 2200 level, Ed, and more economic news coming out at the end of the week. So we've got Nvidia, we've got that hurdle for the tech landscape and the broad market. And then on Friday, more economic news to have to grapple with.
Yeah, the PCE deflator, the core PC price index, which is the Fed's favorite inflation gauge. The Fed has made it clear they're going to cut rates, so it may not have that much importance. That's why I think in last Friday's move, which is obviously what drove the Russell, that's what's going through. The 10-year Treasury yield rose a little bit today, but obviously the huge downtrend overall.
Right.
So that's been a real tailwind for the market. And Nvidia is the other one that we're looking for, really, honestly. Then that could be the trigger that lets the market keep going for quite a while, because then we don't have a whole lot of earnings coming up. The economic backdrop looks positive for the next few months. I mean, the election season comes up, all sorts of wild cards there, but things are looking pretty favorable right now, heading into what analysts are calling the most important years. Just lightly, no pressure.
Yeah, exactly. Dare I say an ideal setup heading into this report, Ed, if we do have a positive reaction, as you said, for the NASDAQ, potentially getting above 18,000 optimistically over the next couple of days, if there is going to be some sort of ripple effect. But on the downside, we could see this 50-day line continue to get tested. The 21-day line not too far below us either on the NASDAQ composite. Here's a look at the S&P 500. If the bull case continues, maybe we'll see a breakout to new highs here. And then on the downside, we've got 5,500 and the 21-day and 50-day sort of around the same levels there. So that's what we're keeping an eye out for on the index level. But Nvidia, which you mentioned, it seems like this is going to, like you said, some analysts calling it a very important earnings report. I do have a position in the stock. I will disclose that. But Nvidia, you can see that relative strength over the last couple of weeks here. It got hit harder on the way down, but it's bounced a bit stronger and now trading sideways. So seeing this pause here does seem ideal for the bulls or even those who have been on the sidelines and want to get in again, if you do see a positive reaction here, Ed.
Yeah, and one downside on this technically is that there wasn't much volume on the way back up. That would be something that wasn't. I mean, we've seen that with a number of stocks. That there wasn't that much volume. So it'd be nice. We're going to see volume one way or the other on the earnings. So we're going to get that. And I think you can treat this as a handle, what you marked right there. I mean, it's not technically because there were some intraday highs that got above there, but clearly that seems like resistance level. And it wouldn't be that far from the 50-day line or the 21-day line, assuming there wasn't, if it gaps up, that's a totally different matter. But that seems like a pretty clear place where you could enter, assuming we get a positive reaction. I think just in general, you want to be ready for things that could be breaking out. You want to be ready on the downside. You really want to be prepared. You don't necessarily make knee-jerk reactions and buy everything if things are good and sell everything if they get a negative open.
Yeah.
But you definitely, just in general, investors should be really just be prepared for Thursday morning.
Exactly. Yeah. And we'll see how it goes. And we do have our levels for the indexes and for this stock that we are watching. So for those who are in it, I'd say around the 50-day and the 21-day line, a decisive break of that level would be a clear sell signal to me, at least to trim. And then, yeah, on the upside, we'll have to see how big of a reaction are we going to get? We know the options market, at least as a couple of days ago, was pricing in a plus or minus 10% or so move. So that could be what we're in for, although that's not always exactly what's going to happen either, within or outside of that. But just sort of something to note. We know that this stock can have big reactions to earnings, but it seems like now, Ed, the stakes are that much higher with this report. There's tough year-over-year comps, and a lot of eyes are on Nvidia right now.
Yeah, and in addition to that, people are wondering how the Blackwell chip delay, which they haven't confirmed,
Right.
but how much will the impact that'll be? What are customers doing? Are they waiting for that Blackwell chip? And none of this is going to affect the results we're getting out. This is talking about things more like 6 months from now. Are they just saying, the heck with it, I'll just buy the current generation, just load that up? So a lot of big questions, the guidance, obviously, but the commentary as well. So the tech team will be covering this with live coverage on Wednesday night. So they'll keep everybody up to date.
Yeah, that they will. And then we've got you covered Thursday morning with IBD Live. Okay, so that's that. Next on our list, we want to take a look. Actually, I'm going to backtrack a little bit. Nvidia, it has such an outsized impact on the indexes, and there is that potential ripple effect here that we've got to keep an eye out for AI plays, whether it's other hardware, software, chip, the whole AI environment. We need to be keeping an eye out for that. But let's take a look also. I just quickly want to go through some other ETFs to give perspective on the market action. So here's a look at RSP, essentially flat near highs. This is the S&P 500 equal weight ETF. QQEW, this is the equal weight of the NASDAQ 100, up about 0.1% today, while the Qs we're up about 0.3%. And let's take a look at SMH and IGV. Those are the chip and software ETFs. SMH reversing higher today by about 1%. That 50-day line looms large, as does that downside reversal day from a couple of days ago. And I know on the NASDAQ Composite, we're keeping an eye on that too. Here's IGV. This represents the software sector in a little bit of a stronger position, also reversing higher today, up 0.3%. Ed, your thoughts on the chip and software landscape right now?
Yeah, I mean, obviously the chips aren't as strong as Nvidia, and Nvidia is the biggest name in there. So, sometimes you say, well, maybe just buy the ETF. It doesn't seem to be the case here. But yeah, if you want to see that getting back above would be a really positive sign. It may not be leading the way like it was. And IGV, that's showing that one had a longer wait. I mean, really, if you look for where we were 6 months ago, SMH is probably still the better performer over that span because IGV took a lot of waiting time. There do seem to be a number of names, some big names, some smaller names or medium-sized names that are coming up. So there was big undercut, I think, or really right there in early August, coming back up. So could be a lot of things there that move nicely in the next few weeks.
Yeah, great point. We need to get our watch lists ready, freshen them up with potential news, market moving news coming out soon. Even though it's always good to keep that watch list fresh, right, Ed? Okay,
Absolutely.
I'm just gonna zip through a couple of other sector ETFs. Here's a look at financials continuing their streak here, seeing that relative strength line perking back up 0.5% today. Then we have XLV. This is the healthcare sector. Same story here, just continuing to climb. RS line, maybe a little bit of outperformance in the last couple of sessions versus the S&P 500, but definitely if you're looking from July, we're seeing that broad market outperformance there. And then XLI representing the industrial sector. Same picture here, maybe over the last couple of weeks, not leading that bounce back in August, but if you're looking over the last couple of months, seeing some outperformance versus the S&P 500 there. Okay, next on our list, let's take a look at GEV. Ed, this is GE Vernova. We have a 185 area that the stock is trading right at, and it's bumped its head up against that level a number of times.
Yeah, and it just barely got it back above. You can't really say that's decisively above when you can draw a line over it and you can't tell what side of it is. It has a pretty. It's because this is a spin-off from the old GE, which no longer exists anymore. It's still trying to figure things out a little bit, even though it's obviously not a startup. But it had some wild action or volatile action. But I like the fact that it's tightened up on closes the past couple of weeks. Ever since it tried to break out, it had that big sell-off last Friday, and what happened there is that there was another wind turbine that broke, and so the big sell-off, but found support right where you'd like it to. Well, I guess I would have liked it at the 21-day line, but the 50-day line works too, and really slashed the losses. So you can see the closes have all been tight. Nice bounce off the 21-day line the last couple of days, so could be actionable today. And again, this is an area that isn't going to be, I mean, power is AI related in some way, but still there's a lot of things, and a lot of the ETFs you were showing that, yes, Nvidia is super important, but there's a lot of non-tech things that are doing quite well as well.
And you can see on the weekly chart here as well, 2 tight weekly closes in a row with some bullish action there. What are your thoughts on the fundamentals here, Ed?
Yeah, I mean, that's still shaking around a little bit. There's some easy comparisons, and that's going to come off a little bit. But boy, some strong growth in 2024 and 2025. It's very lumpy. I mean, it seems like, and so I'm not sure exactly. The thing is with an IPO, some of the numbers are odd, but looking at the annual estimates, looking at some really strong growth there. So that is worth paying attention to.
Yeah, for full year 2024, earnings expected to increase over 300%. And then the following year in 2025, expected to increase another 70% or so, analysts are projecting. Okay, let's also take a look at ARDT. This was our stock of the day today. This is Ardent Health Partners, an IPO in the hospital group, Ed.
Yeah, so this is when hospital group has been doing great. This one showed some nice action today. It cleared the whole IPO base, and the IPO bases can be a lot shorter. And this was actually not tiny. I mean, some IPO bases you can barely see on a weekly chart, but this one had a few weeks. This one, I think, really was actionable as it cleared, the downslope or just that sideways. So around 1790, 1796. Really strong action, came out in heavy volume, one of the heavier days. I mean, it's not from the IPO day, but otherwise it's pretty strong. So that's a positive. The earnings growth is pretty solid. It's just something to be watched there. At this point, you might be thinking, well, it might be getting up there, just something to watch, but definitely one to be paying attention to. The fundamentals, I think we're still going to have to watch out. We've had one earnings report. Sometimes is it really going to be doing that because you're seeing this back and forth on the earnings, and so that is one thing to be watching. But obviously, seeing a lot of strength there, and this is a strong group, so it's nice to also see some IPOs. We do seem to be seeing a number of IPOs that are starting to work, which is another positive sign for the market.
Yeah, absolutely. And then in terms of how to handle IPO stocks, because they can tend to be a little bit more volatile, they don't have a lot of trading history, you don't have much to go off of in terms of the stock's personality. But IPOs in general, it seems like at times, more or less, tend to have a personality of being a little bit more volatile, Ed. So traders should keep that in mind in terms of how they're managing risk, whether it's with the position size that they go with, if they're looking at a breakout area, or even an early entry, and how they're setting their stops as well. What are your thoughts on how to manage risk with IPOs?
Yeah, IPOs, there is a certain amount of hold your breath kind of a situation, but yeah, I look for early entries. Like I didn't do anything, but if I would have wanted to get at the handle entry at the very most, because there is a tendency for IPO that this may all work. It may all look very steady on a weekly, but you can imagine this one coming down 5-6% tomorrow, and then up 7%, then down, and doing that. It often happens, a lot of volatility around the buy point, and using that, and then using a slightly smaller position. But I try to use the entries more than the position size. But
Mhm.
you just have to recognize. I mean, because there be big gains, and if you decide, what, this isn't worth it, I don't feel comfortable with this, and some people do a lot with IPOs because they are volatile. Well, if this one really has a lot of great future, it'll move higher and then set up again. So it's definitely worth watching at the very least. So that's another way to manage it, is just to wait for the next base.
All right. Well, thank you, Ed. And thanks everyone for tuning in. That is it from us for today, but we'll be back with more tomorrow morning on IBD Live. And we hope everyone joins us, investors.com/IBD Live, for all those details. We're going to be joined tomorrow by Mark Minervini. So it'll be great to get an update on his perspective on the market action and stocks that he's watching. Always great insights from Mark Minervini. So be sure to tune in, investors.com/IBD Live tomorrow. We'll see you then, everyone. And then we'll also see you right back here tomorrow after the close.